Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording just after the market closed, Friday, April 21st. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Hey, Barry, can you believe it's April 21st, man?
I can't.
Next
I
week is
can't
the
catch up with time, man.
last trading week of April.
Yeah, I just can't. And expiration.
Yep.
Yeah, it's just like, we work with time, but I just can't catch up with it. So I give up.
We just roll with it. Well,
Yep.
a lot of people are probably feeling differently about time because, man, it's been a grind for almost 2 weeks.
Yeah.
Since we had that cycle hit in early April, everything's been choppy and sideways, especially in the ES. But
But everywhere, kind of.
yeah. When you look,
Okay.
we'll look at different markets, man. Things are turning, things are shifting, and the tide may shift next week as we get that the next iteration of that Rebel Yell cycle coming in this week. We'll see hopefully things will change and we'll stop this chop and things will start moving. Something that did turn that we talk about, Bitcoin.
Right.
As you can see from the chart, we were talking about this important support here, because we got above it and we sliced right through it.
Yeah.
It was weak first 2 days of the week, but held above it. And then we stopped on it on Wednesday, got below it on Thursday, and had a complete bar below it today. So the tide has turned here. The question becomes, does next support hold, which is in this half square? Call it, 24,370, 380 area. By the way, all the levels that we discuss in the markets that we cover and even the markets that we don't cover on the show today, but the ones we follow, are up on a Google Doc spreadsheet, which we'll share the link when we post the video link. So we now, have moved where resistance is now here, which is the previous support, called it 28,860, is now resistance. And we have to see if we're going to get all the way down here and hold. I mean, the question always when we get these turns, Barry, is it a major turn? Is this a major top? Is it a minor top? And the only thing we can do is watch price action and then get, we can sort of handicap and put odds on it, what we think it's going to be.
Well, we also look for squares and things to help us figure out if some of the
Sure.
cycles, what cycles were there.
Yep.
And so far, this looks like sort of a reaction off of the the big down leg we've been having since 2021,
especially this area here that just sort of stopped it. If you look right there. So
we'll see. I mean the old support was right around 29, right? So back in 21, middle of 21, that summer, I think 29 area was the support that held it
right there
before we ran up into no, this was back in 21.
Okay, let me pull back and see.
Yeah, summer of 21 right there. See those lows, June, July lows?
In here, yeah.
Right. So they held. So we're pretty much in the same. Now we're coming from below. So this will be a place to actually sell it in terms of just technical sell.
Sure.
And so I'm not surprised that we couldn't hold, like slice right through it. There's a lot of overhead. Right. And and it broke kind of harder than I expected. So now, it's definitely in weak territory, I think, especially given the bigger picture, right? So
yeah.
We didn't have any overhead. Okay, fine, but we do. So
yeah, we do have, we have this, and then the stuff you were pointing out in 21. So it's the next thing to see is, on any counter trends, do we make a lower high? If we get stuck under this full square or we make a lower high, you got to look out because of the reasons you said. That overhead's there, and then we'll have, people will get emboldened to sell this thing. So
right, and I think that lower trend line you have is probably not
out of the question. No.
Yeah,
we'll see. We'll see. It's early. We'll see how it plays out. We know we have some sort of top here. The jury's still out on what kind of top.
Yeah.
So let's see what we're going to cover today. Barry's going to cover, as he does, the big five, which is ES, bonds, gold, crude, dollar, the euro, copper. I'm going to be covering, it's not a big show because a lot of stuff corrected. So I'll be covering coffee, crude, and nat gas. So let's jump in. Let me throw it over to you. I have a couple things to add to the big five that I noticed, but let's jump in and see what you got. Man, it's a lot of activity in this area, isn't there?
Well,
Holy moly.
a lot of activity going nowhere.
Yeah, I mean, and look, it's for a year, Barry. I mean, this you could say this started in May on that first counter trend there, right? May of last year,
Right.
almost a year.
Yeah, this box here.
Mm-hmm.
Well, what to do? You just do what you can.
That's right. Protect yourself.
Yeah, yep. And you have to, definitely adapt to the market. So, which means you have to maybe, you can use the same methodologies and systems, but you have to tune them to the volatility, right? So,
Absolutely.
so that's just ongoing tune-ups, like in the old cars. You got to tune them up
Mm-hmm.
with the volatility. Anyway, I was messing around earlier and I was just thinking of like how many ABCDs came up into this 4150 area and finished up, right?
Right.
Got 3 of them so far. And the other thing to say is like S&P does a lot of ABCs when it terminates that leg. And this was just to show you guys a good example of that,
Yeah. Really good examples.
Yeah. So it's definitely something that happens and it happens often, just like we had one here. So I'm going to delete that. We've had it for a couple of weeks now. Boy, like I have really not a whole lot to add from last week because we really haven't moved a whole lot since last week.
No.
Other than we did try to get on top of 4150 and try to sort of, establish above that, but just couldn't do it. And it was kind of weak. And the last couple of days, we just slipped under. And of course, today we closed, 41.54, fine. We're 55, let's say. So we're just in that range. We didn't get above the 90, which would have been really the thing if the market was alive and well and kicking, right? We're in a kind of a bull market or any kind of strong trending market. This 90 would have been taken out already and will be up in this area. So we didn't do that. It just shows it's showing signs of being tired, basically. Not a lot of selling coming either. Everybody's tired. So,
Indecision.
yeah. So in the meantime, talk about time, always moving. And last time we talked about this is kind of important. The 135-day count coming into a pretty close to a 90 count. So that's kind of important to see. And the reason I'm pulling in the timing is market could be doing all kinds of crazy things and we get distracted and we forget to watch the time. It's like you forget to watch the clock and you can't really take your eye off the clock. And here, I posted this on Twitter earlier and just to show you, when you were watching this stuff, you want to look to see any kind of a point we're coming into where the market might balance itself out, meaning through corrections or something. So here we had, from last high to low was 27 days and low to high coming into this 135 was 27 days, right?
That's good. Yeah.
So that's kind of an important thing to watch. And I posted this, let me share this because it looked a lot better on the 4 hours. So this is a 4-hour chart. You can see high to high, that 27 turns out to be 360 4-hour count, right? Which means it was 180 bars to the low. So we got 180 high to low and 180 low to high. And that's, well, things can change after one of these cycles expire.
And all within that 90-degree price square too.
Yeah, all within it. So here is 360 in time, high to high. And here 180 low to high, but 90 in price, right? So the square from the low would be 90 by 180, which is no joke. And that's what the blue line is. And the blue line is, it's sort of like a 1x2. And you can see how we stayed above it all the way through here, then started to get tired, but somehow we went up and tapped it, from below, which is really a sign of weakness. And we can complain we were going sideways, but if you look at it in this context, you can see how it sort of started to sell off, right? I mean, it didn't go into some kind of waterfall, but it certainly sold off. So that's the 4-hour version of this. And I think 150 going into next week, 150 is going to be important to watch because, if we get stuck under it, it wouldn't take too long to get down to 40.38, 40.40, 40.38. And that also being right in the quarter of the square. And I also added a circle connecting these 2 points. And the circles also, when we get all kinds of messy price action like this, a decent circle is another way to trap the market before it starts to move. So my take on that would be, break of the circle would be the point where we could actually accelerate the move, kind of like what we did in crude,
right?
Except in crude, we kind of broke and sat around for a while, although we got a little move out of it. So it could be different this time, but the angle of it and how we moved up, I think, and being all the geometry and counts and cycles that are packed into this little time window in the high, I think a breaking of the circle could give us a decent move out of here. So I think starting next week, you really have to be on top of this and not to get lulled into a sleep and miss getting in on a good entry for whatever move that's going to show up. I just can't really imagine. I mean, we might get one shot. We might tap the circle and go one more time and fall out of the square. But we could also, I've seen plenty of examples of where it would go sideways and just drop out of the circle and then sell off. So so this is, I mean, a lot of people are talking, it might get weaker after expiration and all of this, but we're looking at it from another angle. Like, is there any evidence for that? So looking at the structure and the cycles and the counts. So I'm saying, yeah, there is evidence for that, and let's not ignore it. Yeah.
Well, and what we're trying to do is, and what you're doing is, we know out of this dullness will come chaos, and we're trying to figure out when are likely times for that to happen, and falling outside that circle is one of those times.
Yeah, absolutely. I mean,
your time counts are another one, right?
Yeah, and I mean, just the levels that we use are enough to help us kind of gauge that. But because we have everything, it's really important to watch it and see how we go. There's definitely some kind of acceleration coming. We just have to wait it out. Now we did, I mean, not to, just drill down even more, but you can see how we consolidated for about a week below 150, right? And then we got on top and consolidated most of this week above 150. Yeah. I mean, not really clean above, not by making air or anything above it, but just generally above. So it's really in 2 parts, right? We had this we can't say this is all one flat consolidation. We consolidated here under 150, and then we had that 1-day breakout, and we just had around above 150 for the most part. And so that's why 150 is going to continue to play a role next week to see, hey, are we going to get above this and maybe try for 90? We'll see. And that 90, by the way, is around
42.30, around there,
42.30. So we'll see if we want to go and tap that, and that would be 90, and it might start afterwards. I mean, that would still give us room in the circle. So this is just to try to time it out. So either way, I think watch 150 for next week. And if we lose 150 for some reason, I think short side could open up and it could start trending to that side. So that's the main point. Moving on to the weekly, we are really pushing this triangle here that we drew up. And normally in historical charts, this is bearish, Not forever. But it's a bearish sort of
a continuation pattern, isn't it?
Yeah, exactly. But we got a lot of stuff here. We came down 72 by 36, almost at the low. And we had these measured moves we were looking at, and we tapped out around this 35.70. level. So we had stuff at the low, so fine. We were looking for some kind of a counter trend. So now you can see 36 degrees up on the 72 would be 42.35 or so. Surprise, surprise, right?
Right in the same area as your daily.
Same area, but using a different square from a different place, by the way, right?
Which is beautiful.
Yeah. So this is the kind of stuff, this is like evidence. Okay. So why would 42.30 be important? Well, on the daily, we saw why. And here on a weekly, it's roughly in the same area, and we're exactly 50% of the square. So either we're going to squeeze through this and get on top of that, and then that opens up a way to challenge the old high. If we don't, well, then we're probably going to consolidate. Looking at the pattern, we're probably going to consolidate longer and maybe visit the lower range now. So that's all I have for now.
That's good. It's good review.
Moving on to the bonds. Not much happened this week.
Did get some weakness, which we were looking for last week.
Yeah, we did get the weakness. Came off of 130. We were looking, first of all, this 134. If you guys have been watching it for a while, we've had that 134, and we've been talking about it ever since it rallied, thinking that that would be the extension of it, because that was the highest number I had here. And so we messed around a little bit, tapped it last couple of weeks ago, and did a false break. And here we are at the lower range now. So I think it's probably going to hang around here till we maybe at least FOMC might change something next week or the week after, I guess. Was it May 3rd, May 1st? May 3rd, right? Yeah. So until then, 128.5 probably is the support level here. It's a quarter of the square. So we'll watch that for now, even though this is also a big consolidation going on in here. Short side is what's favored. So we'll see how that goes. And looking at the weekly bonds, we're in this big old, what you call that like a fourth wave kind of action with the expanding.
Totally. Yep.
And we're really pushed up against the upper range. So I wouldn't be surprised if it trades lower again. So that's in the cards. We'll have to watch how that plays out. 134 is really the number you have to know. Rest of it everybody knows what to do. Here's crude. We talked about that circle breaking here, and what happened here was we came down into it and we broke to the upside, right? So that was the initial break, which wasn't bad. And
no, it's a nice move.
Pulled back, and the second one we failed here. We knew that. Then once it couldn't hold above the 90, we knew it was going to go into sideways or go back and check the old lows. So 73.50 was that lower boundary, sort of the boundary of that range, and 83 was the upper boundary. So what to say? We shot out of there after this sort of false break, and now we're stuck back between 73 and 83. And now we did come down and close this gap here. We're almost there. So it's possible something is going to happen after that. But for now, we're back in the range. What else can you say?
Yeah.
But what's different is we did finish a cycle here. This low came in exactly at 270 degrees. 270 bars.
Yeah, the low was good. So it's just a matter of
5 by 270. So
right.
The low is good. So yeah, it's back in the range, but and this easily could have been a third because we had the gap there, 1, 2, 3, right?
Yep.
And a 4 and a kind of a failed fifth. So that means we're going to get into some kind of ABC. So either way, we're going to consolidate a little bit longer, it looks like. But what I would say is, as long as we're above 73, it's definitely in a bullish stance, right?
Yeah, I was going to say, unlike that previous consolidation that we came down into, so it was sort of a bearish consolidation. This one's more of a bullish consolidation if it gives us a higher low.
Right, exactly. So that's it for crude. Let's take a look at the weekly. Well, we took out this 79, 80, 79 area. This line 79.90, 80 level. So now we're below this the prior 2 weeks lows. We got under that. It's not bullish, and 75 is the high of the bar, the second bar coming out of the low. So we're kind of trapped in that. So we have to see if 75 area holds. If it does, we're probably going to consolidate here and I guess wait for the next shoe to drop, whatever that will be. And we're getting close to a 90 from the high here. I'm sorry, 45 weeks from this high. So that's coming up next week. We'll see if that means anything. But for now, we're back in the range, and it's probably not the place to load up on crude right now. Just,
see how it plays out more.
yeah. Just you got to watch it. But yeah, that's all I got for that. All right, gold. We talked about this 90-degree level, the fact that we broke out of that to the upside. And last week we talked about, like, if gold is strong, we should hold above the 90.
Look at that.
Yeah, which is right about
The lows of the week.
Let's say 1978. So that 90 just happens to be the high here in February. And we did 90 low to low. So that was a powerful cycle. We ran up into that. So I wouldn't be surprised if we go up into, do it at least to 45 and finish this up. That would be around May 10th, May 11th. And that would, we could give it a chance. Well, heck, we could even, do 180 and go up into July.
Right.
But for any of that to happen, we definitely have to hold above the 90. And that would be around 19. Well, let's give it a little room. Let's say 1977, 78. That's really the level you want to watch. And if we can hold above that, I think consolidating above that would definitely be bullish.
Very bullish.
And what happens if we break through it? Well, then I think bulls are going to have to wait a little bit. It's going to take a little while longer to consolidate and reset. Looking at the weekly gold, we had that half square up here, the dash line, around 2050. You can see it held it a couple times, came in here, stopped it, then on the tracks. We're 2 weeks down, so it's possible that we go one more week down. It wouldn't be out of the question. And we'll see how it goes. For now, we're looking at this as resistance. And if we can, and it's probably going to consolidate a bit. So if we can consolidate above this high, it's probably going to be bullish. That's around 1972. So 78, 72, that's really the key. 1972 to 78 is a key level at this stage. These 19s and 18s, these are like major levels we got to watch, if price can get above it or not. So, but now for the short term, it's 78, 79 is what we got to watch.
Like a lot of commodities, Barry, wouldn't you say gold it's correcting? The question is, what kind of a correction are we going to get?
Yeah, that's true. Well, I would say if it's really, we did have a good run, right? So because of that, I would say that finished the leg, not quite the ABCD, but
sure,
we ran up fairly strong. And we did have a 1, 2, 3, 4, 5, perhaps. Gold likes to run in fives. So this should really be not a sell-off coming off of this high. I'm thinking it's more of a consolidation. So the key now is to see, at which level is it going to consolidate? Like here, for example, you can see it consolidated above the 180.
Yep.
Right. So we knew here, no matter what shenanigans happen, as long as it's above the 180, that's going to be bullish. And yeah, that was right. That ran.
And it was shenanigans for, look at that, a couple months.
Right.
Yeah.
Put all the bulls to sleep, and then like a rocket took off. Right.
Yep.
And we came back again, 180, 180, 180. And this was sort of a washout, right? It came down and grabbed all the, bulls really by surprise, I would say, and consolidated and took off. So this range, we've had it since 3 years now. And so if it's not going to go higher, it's probably going to come down and consolidate. We'll see what the consolidation looks like.
Right.
At this stage of the game. And we have a little consolidation here, so we can hold above. It's really, that's why that 70, 72, 78, that this area is really important, because we've had a lot of price action here. You can see it here in 2020. We got this high, we have this high. So ideally, if gold is really strong, we want to hold it above that, right? About, let's say 70, just to be safe, right? It'll give you enough breathing room. Now, if it doesn't hold above 1970, then I would say we're looking for a consolidation above 1919. That's a good way to wrap it up.
Sure.
Let's move on to copper. not much to say. We're consolidating. We went up and hit the quarter of the square up here. And until we get above that, not much. Unless we come back and test the 50%, which would be great, you know,
Mm-hmm.
because the long term, this is very bullish. And let me take this out. Maybe we can set up something new next week.
A good example of a bullish consolidation, isn't it?
Well, yeah, anytime you're above the half square, man, you know,
Mhm.
it's no joke. So this is okay, as long as it's above the half. So anytime we come closer to that, you know, coming off of these levels are going to be good buying opportunities. So
Mm-hmm.
that's there. For now, we're looking for you to finish what it started this week.
Mm-hmm.
And going on to the weekly copper, not much. I mean, look at this box, right? It's like
Battling at that half square.
yeah, I mean, there's a box, there's not much to do. And we are working up a little bit of a triangle also. You can see
Mhm.
that, right? And that could be a nice break. So let's not, again, these things you really got to watch when it gets close to that. Looks like we got a few more bars to go till we get through it. And
I mean, in copper, daily, weekly, and monthly are all in triangles.
which is great for long term, but for now,
it's right.
You know,
It's frustrating for now, but it's winding up for a big move.
let's look at the dollar. Dollar's in the news quite a bit these days,
Yeah,
but holding its own right there all week.
Sure is.
tightly wound up. We had a false break at this low. Looks like the cycle is shifting to some other. Maybe it's going from 90 to 72s again. We'll have to watch because the dollar shifts around like that. Right now, not much to do. We'll just wait for next week to see how it plays out. Key is to see if these lows hold, because that false break, it was important for that to hold. And if we consolidate here, like this is kind of a very choppy second, you know, 2 and a 3,
Mm-hmm.
breaking us above the 90, that's possible. Then do a 4 and a 5 up. If that's a 2, complex 2, right?
Boy, and I'll tell you that would fit everything together. Let's say we get a strong dollar move that is in this cycle has been rough on gold, rough on commodities, and rough on risk.
Well, we have
the setup's there.
We have the potential setup.
Yeah.
Right. So we'll have to see how that works out. Key thing to do is watch the lows, make sure we don't take out that low. If it takes it out, then we're in a different cycle. But somehow we managed to get above, let's see, what's this level here? Hold about 102. Yeah, we talked about it last week. If we can hold about 102, then I think the rest of the leg might be a lot faster in unwinding. Between the low and 102, well, it's just going to be a grind, one or the other. And the weekly dollar holding still, you know.
Same. Yep.
Now you can call this double bottom. Yeah, it was a false break. And fast moves should come out of that. The sort of the caution here is that we really didn't get that much of a fast move out of there. So that's okay. It doesn't happen every time. But the key thing for the dollar long term is to make sure that we're holding about the 90 here. That's about 1.5. So we got to make sure it's as long as it's above that, I think upside potential is still there, no matter what the news is saying, right?
Right. That's excellent.
And it would be kind of beautiful if we can come into the correct for 45 weeks. That would put us into August, and that's possible too,
right?
And then take off from there. So either way, it's kind of it hasn't really found traction to the upside yet, and not really to the downside. As long as we're above 90, there's a lot of support there.
A good look on the dollar.
So far, so good. Yep. And the euro, well, we're at this 144 by 144. I mean, I would be surprised if we settle above this and just start trekking towards 216.
Right.
But it could happen, anything can happen. And it's not what I think, it's what it's doing. So geometry wise, we're, you can see like last couple of weeks, we've been just hanging around this 144. But we really need to get above, let's say, just really clear 109, this area here. And if we can clear that, or we can say the high on, like the high of April 4th, that would be, that's 109.733, something like that, just get a ballpark. So if we can hold above that, then I think it could go a little bit higher, meaning the dollar a little lower perhaps. but we'll see. Key thing is we did do a square into this. Doesn't mean it has to drop as soon as the square hits. But it's nice when it does.
Mhm.
But like most things, we've had things hit squares, like the S&P hit this 180, about 360, and all of this in different time frames, but it hasn't like broken loose. So I don't know if it's all the hedging or controlling mechanisms that are out there, but we'll watch. We'll see. They always end up balancing out. So, and we also had a low onto the 72. So low to high is a nice cycle.
Mhm.
We'll watch it next week. I mean, they're both in a position where it can reverse because of the evidence, right? Or at least
Sure.
what's there in terms of geometry. So yeah, it's possible. Looking at the weekly, the one thing to notice is that we're very close to the 50% of the square, which is the dashed line. And that's about 110, almost 111. And that would be the max run for this, I would say, because of the sort of the bigger trend and the bear market trend we've been in. So yeah, the 110, 111 range is like max resistance.
Right.
And under that, we can mess around. You can notice we're not messing around above it. We're messing around below that. So I think that's a definite potential level to watch. Anything you want to add to that?
Nope. That's it.
We're good.
Yeah.
Okay. All right. That's all I got. But it's a key level though, you guys. So remember that. All right, Ben, what's going on with this major critical point here?
Yeah, you could see it, right?
We're crisscrossing right through it,
Holy
sideways,
moly.
sideways.
Real big battle. And it's been a couple weeks now we've been battling here. The NQs, as we have been, following the saga, has been, moving nicely level to level. And here we are, and this is clearly a major, major decision. The thing that I noticed is we got a full bar under the full square there today.
Mm-hmm.
So that's a red flag. It doesn't mean it's game over, or this thing is going to crash or anything like that. Because if you're looking at things, you could say there's one, there's two, that's three, this is four. Right. So do we have another push higher? Possibly. The thing we know is that this is the key level right now. 13,120 area.
Mm-hmm, mm-hmm.
Get above it, stay on top of it, bullish. Get stuck below it, you got either a bearish resolution or more chop down in here. So this level is super, super critical. And you can see the battle that's been going on for 2 weeks right around it.
Right.
So we just got to let price lead us. Price
Mm-hmm.
lead the way, tell us which way it wants to go and what's more probable. And then we can know whether or not we have a decent trade set up.
Always. And having that line there, that's what helps us figure out, what to sort of expect. Is it in the middle of nowhere? Is it a critical point? And here, in this case, it is. And the S&P is pretty close to that, right? We know what's right in the area. So the squares help.
It's a big decision point. And one of the things I've been talking about, Barry, on Twitter with the followers and people is when you see it crisscrossing a line, whether it's, one of these major full square lines or a half square line,
mm-hmm.
it generally results in chop. Right. And there's a real battle for control going on. And until, one side wins by showing you, okay, we've gone below, came back and tested and couldn't get above. That's when you get the fat pitch that you take the swing at. This is gambling, man, because we don't have an edge, right? It's a coin flip.
Exactly.
So whenever you see, if you're just starting to work with the squares, or you look at, see the squares that Barry posts or the ones that I tweet out, when you see it crisscrossing any of these full squares like this here, or half squares here like this, it's telling you that there's a battle going on and there's no decision that's been made yet. Because you can see, look at this battle was going on here, right? Then we came down, tried to get above, couldn't, and that was a decent sell there.
Right.
Half square full. You got a half square move there. So it's just, really watching these squares, finding these critical spots, and then letting price tell you, okay, what's more probable. Here we don't know yet. We don't know yet.
Right.
It's leaning towards the bears right now with today's bar, and the fact that we were trying to stay above here and couldn't do it. So it's leaning towards the bears. But we want it, we want the fat pitch, not the coin flip. So for that reason, we got to let this thing resolved on NQ and see which way looks more probable. Before we jump into the commodities, I wanted to show you an ES weekly chart.
Mm-hmm.
To supplement some of the stuff you did on ES to show you why we are sort of up against it right now.
Mm-hmm.
Not only do we have the triangle, which you very well showed that we were dealing with, which was a triangle going through here. But if you look, we're up against the half square here. And I put these circles on because it's sort of, using a square and a circle on the same chart. And sometimes you get real nice corners in here.
Yep.
We're at one of those spots.
Yeah.
So this next week, we either need to start getting a fast move to the downside, really start making hay out of here, or we're just going to go sideways and escape the circle. And then we know that this, call it 4,200 is going to be key. Do we get stuck under it, or can we get on top of it? Which is not too far from your 4,230, right? Your critical level there.
Mm-hmm.
So it's we are at a very important juncture, and again, we have to let price lead the way and tell us which way we're going to move.
Mm-hmm.
So, but I wanted to share that chart, have you guys look at it. On the commodity side, really saw a lot of things complete. What kind of move, we don't know, but there was completion in things like sugar, in things like cocoa, the continued sideways in cotton, continued sideways in copper, gold and silver. Barry talked about gold very well. Looks like, we completed something and a correction is starting. Silver looks similar. The grains all, absorbed selling this week. So there's something else is going on there. And there's no opportunities, in my opinion. There's no real edge in any of those markets yet, because remember, on the bigger picture, they're all bullish. So we're trying to make sure we find bullish setups and setups where there's an edge to the bullish side, because then you're kind of lining up the bigger time frames with, what would be a daily or a 4-hour. There were 3 different charts, though, that I wanted to look at, because they've all, 2 of them had decent moves up and are starting to pull back, and one is what I think is forming a bottom. So I think they're worth focusing on this week, as we may see some sort of positive developments there.
Mm-hmm.
First one is coffee. We've been talking about coffee since we were isolating this low coming in early this year.
Right.
We've had a nice, not quite ABC up. I drew the ABC in just to show what's possible. But I think, and I was talking about it last week, we had price and time here, where, early this week, we had a push up to new high for this leg, and it's on a full square timing line. So I said, all right, let's see what happens coming out of here. And we've started to push down out of this. Mm-hmm. What I'm interested in is where does this next low come in? We're battling right here at the half square. Can we hold the half square? Can we push higher? Can we give ourselves, another higher low here that sits on top of this previous high? Are we going to have a deeper pullback, that maybe comes down to this trend line and holds this full square here? The jury's out. But why I'm interested in looking at it is, we had a low, a high, a higher low, a higher high. If we put in another higher low, we could be catching a third or a fast move coming up out of here.
Right.
And even if it just does an ABC and gets up to, 218 to 220, that's a nice move.
Mm-hmm. Mm-hmm.
If we catch a 3 and it pushes all the way up to the full square or higher, obviously that's what we're all doing this for, is to try and catch moves like that. But I wanted to highlight this because it does look like we put in a high here. Now the next thing we want to see is, what does this pullback look like? Do we go sideways? Do we make a higher low? Can we get the setup where we may actually get a strong push higher?
Mhm.
What do you say about coffee here?
Well, I think it's trending. I think it could go a little higher to find resistance, which is up in that 114 square line. Well, the full square above, right?
Yep, around
So up
212.
until we get into that level, I think we're just probably just I would look at it as a normal pullback for now.
Yep.
Yeah, I don't have a lot to add other than to just kind of go along with it.
Yeah, it's one I think you watch. We've got a bullish setup. Now let's see how price
I mean,
action plays
if you
out
take the quarter square, that's where it should stop.
right in here.
Yeah,
Exactly.
above that. As long as it's above that, it's way to go.
Yep.
That's 183. Yeah, that's a good area.
So let's see how
Yeah.
it plays out. It's worth watching. It's
But it's
something
moving. Momentum's good. Everything looks good. This could be just a 1 or 2, 3 day counter trend. We'll see. Yeah.
Yeah, we have to watch it. Next one we're going to look at is crude oil. Barry covered it. I want to add a couple things here. As we talked about, this channel was sort of bearish as it was coming down. We're back into the channel. As long as we get a higher low here, this is going to be a bullish setup. I mean, this thing could come down to the bottom of the channel and still be bullish, like in that 72, 73 area you talked about.
Mm-hmm.
And I wanted to show you the weekly here because we have more circles here, which are kind of interesting. You can see what we're banging up against here.
Yeah, there you go.
Look at that.
Mm-hmm.
So this is what's capping it right now, I think, on a bigger picture. But look where the low came in this week. Right on the half square. So remember, next week the next bar is going to be right here. So 81, 82, we start breaking out of the square. And when you can break out of these squares, you generally get a push higher. I mean, the circles, you generally get a push higher. Look at what happened here, right? It was getting caught under here. It breaks out and it goes to the next one.
Right.
So if we can break out, that can take us up to the top square, which is around 90, the upper part of the square. So this is, just like the S&P, this is in a really interesting tight spot that we should get a resolution on in the next week or two.
Right.
But crude looks bullish. Longer term, it looks good. Going back to the daily.
But I think it has to really hold about like 75, that area, for it to have that, be able to catch that traction.
Yeah. And that would be right in here. The high of this bar was like 75, 80, 76 area. So we'll see. We'll let price tell us. The gap has basically been filled, which markets generally do. So let's see if the bulls really did, take control here and get this first push out. Here comes 1, 2, and again we're trying to catch those threes, the fast moves. So we'll watch it. We'll see on crude.
Yeah.
The last one of our favorites, the Widowmaker. Man, has it been teasing people. The thing that I really like about this, and we talked about this before, I didn't talk about it for a couple of weeks as it was chopping around down here, but we got a false break, right? We had that low there, and then we made these several lows here, and then this one pushed as made a lower low, reversed, closed on the high of the day, then gapped up the next day. Not an all clear sign, but definitely a, hey, you better take a look at me sign. Right. And now we're battling at this half square. To me, the next big point is if we can take out this high, which was 238.5. So call it 239, 240. You take that out, then the shorts are scrambled, the bulls are encouraged, and we could see some run here.
I agree. I think that high is the key next week.
Absolutely. Take that thing out next week, and you got a green light on that gas. And as we know, when this thing runs, it runs. The bottom formation and the small bars, everything that happens at the bottom, if you go back historically and look at this, it's been happening in here. We got a
Right.
false break, we got small bars, we got sort of boredom in here,
Mm-hmm.
just grind. And now it's starting to perk up. But we got to take out that high. Take that out, and then the full square comes into play at around 282. Take that out, then we've got this recent high that spike we made there. You take that out, and then you're talking about a half square at 340, and then the full square at 4. When you're talking about something being around 240, that's a major move.
Right.
So this thing is fully on my radar, fully, like, I'm watching it on a 4-hour basis to see if the setups are there, because it's been quite a move from that high in September.
Yeah.
So
It's worth watching.
anything else to add on nat gas?
Well, watch that high. That's it.
Mhm.
It's a critical high.
It's big. With the big cycle coming in this weekend, Barry, what are you doing differently, or what's a part of your process when you have a big cycle come in? What do you do, say Sunday night futures, Monday? What are you looking at?
My approach is basically I have a approach, I have a method, I have a systematic approach to these things. So I do all this work, and as you do, and I use this kind of work with the squares and cycles and all of that as a template. And I wait for my system to basically give me signals to go long or short.
Mm-hmm.
And as far as that goes, I mean, it could be, I'm just saying, if people are going, well, what's the system? Well, it could be as simple as a moving average cross, or it could be as simple as a trend line cross. It could be as simple as, having a GAN line, let's say 1x2, 2x1, use those consistently places to trip you into a trade. Mm-hmm. So, you have to, once you have a sort of a systematic way to get into a market that you think is going up or down, that system will trigger you into a long or short trade. So I'm basically, I wait for that. That way is really no emotions involved. You do all your work, you kind of map it out. It's like kind of like the weather, you kind of check the weather, understand what's happening, and you can take your umbrella or not.
Right, based on that
you don't
forecast.
step out of the house with the umbrella, raincoat, everything on if it's not raining, right? So you kind of wait, but you understand what the potentials are, and then when the signal comes, it helps. I think this approach helps me not have to think in the middle of the fight, so to speak.
Sure.
Once you know all the levels, you know where it could go, where it could press against, and then you just take the trade when it comes, and because you know the odds of the system that you're using. So
one of the things, yeah, I like that. I think that's
Mhm.
very helpful. One of the things I try to do, which I want to hear your opinion on as well, is when we have these cycle dates come in, I try and see if there's any evidence of a change in character in the price action.
Mhm.
Like, were the bars big going into it, then do they get small? Were they small to get big? Was it holding support before and then support's giving way? What differences do you look for in price action as these cycle dates come through?
Well, I mean, if it's like, let's take the S&P for example, right? So maybe you can, did we talk about the S&P? Yeah, the S&P for example. So if we think, well, we have a high that was there, and we looked at all this different evidence for why there's a probability of that being a decent probability of that being a high.
Mm-hmm.
Well, I'm looking for any evidence to show me that the levels are not holding. And it doesn't have to get complex and super complicated, sophisticated methods. If you go back and look at a chart, the simplest methods work. If you just wait for them to show you what's happening, right? Because the market's always telling you what's happening. There's no secret to it.
Mm-hmm.
But you have to wait. You can't preempt it, right?
Right.
You jump the gun, then you jump the gun. Along with that comes a whole bunch of risk. There's enough risk in a system, built-in system anyway, right? But why add to the risk? So you wait for the
wait for your signal, right?
You wait for your signal. In the meantime, you can see, I mean, with experience, how the character of the market will change. For example, you might have a smaller, if the market's going down, let's say we break to the downside, like looking at this chart, let's say you break to the downside, and then the counter trends are shorter, the counter trends only less than 50% of the move. So now well, it's weak. So that's this is what we're looking at. Then you can look at volume, then you can look at the VIX, you can look at different evidence to kind of see, hey, is it still moving that way?
Right.
But you primarily use your system to trip you into the trade, and to some degree, if you can, to manage the trade, right?
Yeah, I mean, one of the things
So
that
here's a good, this is what
here's this like 60-minute chart that I post every morning. We had a cycle date here. I had a cycle date. You had a lot of timing here, on April 4th in this week. And look at the difference between the price action going into that,
right,
and then when we came out. Right. And
Right.
so that's what I try and do. It's not always a corner, right? And we didn't collapse here off of this at all. If you look at, where did price go from here to here? Pretty much nowhere. But the change in character was evident, right? And that was the effect of the cycle. So as we have another cycle coming in this weekend, what I try to do, and what I think it's important for us to do, is try and figure out with high probability, what's the effect of that cycle, and how do we get that information? What does price do? Like, remember, we've been chopping here, right? Do we start, like, the support start giving way early next week? Okay, that's different. Or does resistance start giving way, and we start holding it? Like, are we trending like we were here now? Whether up or down, that would be you could say, okay, that's the effect of the cycle, is this chop in this range that we were stuck in is over. And this cycle is bringing this new sort of price action, or this new energy to this particular market. And the only way we can tell that, and that's what I'm getting sort of like probing and asking you, Barry, for any other ways you do it, is to watch price. All right, watch price, watch support levels, use your squares to see, does this continue to hold price? Does this continue to support price?
Exactly. And as far as methods go, I mean, these days, any charting program has about 100 canned indicators and all of these things. But really, if you can just understand how to draw trend lines,
right,
and be able to read a chart, that's really all you need, really, just for short-term trading, not to try to catch these moves that are 3 years long, but short-term trading, trend lines will do just fine, and they help. But you have to learn how to draw them, where to draw them, what's meaningful trend line, what's not. And I think anybody can learn that even without somebody teaching it, just by practicing to see what happens, right? There's immediate feedback from the market, whatever you're doing. And we have the benefit of going back and studying years and years and years worth of data, and
patterns.
We can forward test, we can forward blind test. So there's plenty of at this point in time, we have more than enough tools to quickly learn, even on our own. And anyway, getting back to trend lines, I use trend lines a lot. That's pretty much my main thing. And I look for not just support, I look for resistance coming off of other points. I use
here's some.
Pardon me? Yeah, like that. And I use also geometrical lines, like 2x1s, 1x2s, and I scale them properly for the chart that I'm using.
Right.
But even, everybody's thinking, some GAN lines have to be, there's a secret, or there's got to be the perfect, there has to be the perfect ratios and the square and whatnot. The thing is, if you can draw proper lines, you'll find the 2x1s, 1x2s that are working. And why did I say 2x1s and 1x2s? Well, 2x1s work, that most of the time, if you scale the chart properly, is really not the 1x1 that's working most of the time. So you can use your own wisdom and your own intuition to play around, and you'll find things that work. The thing is, for that to happen, there's only a certain kind of breed of people that will do that, put all that kind of work in. So I'm not saying everybody should do that. Then there are other people that would want to be shown how to do it, and then they'll be able to do it perfectly. So it's not for everybody. So people that can research on their own, they can do that. People that can't, well, they can ask the people that did the research, you know,
Right.
and get it that way. And there's books and there are all kinds of material out there. But the other thing is you have to find something that works for your personality and your character.
Yeah. What you're comfortable with.
Yeah, what you're comfortable with. And when we talk about that, we're really talking about, you know, your relationship with risk. You know, how you know, what is it? Do you avoid it? You know, can you not handle it at all? And how much can you handle? And are you consistent with it? So those kinds of things come in from the background till you get comfortable with whatever you're doing. So that's why I don't think it's a good idea to jump from system to system. You find something that works for you, and then you just trade it.
Right.
And all of this other stuff that we talk about on the videos and, you know, stuff we post, they're more like template stuff. That's how I kind of refer to them in my mind, right? They're like templates. They're not trading systems or methods or you know, ways to get in and out. No, we're talking about basically marking off the charts, going, these are this zones, that zone, watch out for this, watch out for that, these are the possibilities. So when the trade does come in, you kind of you know, you have a better situational awareness, so to speak.
No question.
So
Well, I know we often say it's a big week, but we have a big cycle hit on Saturday, the 22nd. You have a lot of timing that you demonstrated with, you know, 180s and 90s coming in. So it's while it's always important to watch price action on a week when you have timing, you really want to watch it because remember these things, this is not like intraday timing or daily timing. We're looking at timing that could give you a decent swing. And if we can see that something's trending and we see, you know, levels that are either holding or not holding, you know, it gives you an opportunity to make a nice risk reward setup. And that's all we can do. You don't know what any trade that's going to be profitable when you start out and get into it. All you know is the setup that you have. And if you have good setups and you do it enough over enough sample size of trades, you're going to be profitable. And that's the goal and that's the idea. And this is one of those weeks where, you know, because of the timing and where we are price wise in a lot of markets, you're going to see setups that will have that favorable risk reward that you want to get involved. So
lots of opportunities,
lots of markets to watch this week, lots of opportunities. And I'm actually excited because I think it is you know, we've been suffering through, and just in the ES, we've been suffering through this basically one square on the 60-minute chart since the 4th. And it's tough and it's hard not to trade. But that's what I've been trying to discipline myself to do is when there's garbage like this, is just don't trade it. You know, just wait for the good setups. And I believe this next week and this new cycle is going to give us just those opportunities. So
yeah, I think starting next couple of weeks, I think are really going to be important. Could be turning points for a lot of things.
Yep.
Well, we wait and see. I mean,
rest up this weekend.
Yeah. Now I was going to say that's why you want a system so you don't get emotionally attached to what the market's doing.
Right.
You know? So anyway.
Awesome.
All right.
Well, have a great week, everybody. Barry, have a terrific week. Great show. And we'll talk to you next week.
All right. Thanks, Ben. Take care.
All right. Bye-bye.
Thanks, everybody.